Former Celsius Network LLC executives withdrew $18 million in cryptocurrencies in the 2 months before the company filed for Chapter 11, according to documents filed to bankruptcy court. Alex Machinsky, the former chief executive of the crypto lender, withdrew $10 million in tokens between May and the bankruptcy filing on July 13th, according to court documents. His lawyer confirmed the size of his withdrawals. Machinsky stepped down from his role in late September following a request from Celsius creditors. The filings also show that Mr. Machinsky's wife, Christine Machinsky, and former chief strategy officer Daniel Leone withdrew $2 million and roughly $7 million, respectively, worth of tokens. Joining us to discuss further, Ajibola Akanmo, who, of course, is in Vancouver. Ajibola, you're very welcome. Thank you so much for joining us. Good morning to you. So, for the purpose of our viewers, can you help us define NFTs?
Well, I mean, there's this huge focus of NFTs as digital JPEGs, but that's not where all the buck ends. Basically, NFTs are basically unique lines of codes that are that cannot be replaced with anything else. So understanding that, you see that NFTs are basically assets that can be assigned to, basically lines of code that can be assigned to physical or digital assets, basically. And, like I said, it doesn't stop at just digital JPEGs, right? You can have NFTs as assets in real estate to represent a particular building, have it to represent, for instance, luxury goods, since that's the main topic of what we're discussing. So yes, NFTs are basically unique lines of code that cannot be replaced with anything else.
All right, and just again for our viewers, you're the African Ambassador, Authentium Foundation. I have to also throw that in there. And once again, thanks for joining us. So the attraction of NFTs for luxury companies, what's in it for them?
Well, the answer is pretty simple. Exclusivity. Luxury brands thrive on selling the idea of exclusivity and uniqueness to their customers, and that is literally the core definition of what NFTs are really all about, and even the core functionality of what NFT is. So the aims of these brands are actually quite simple. Sell a unique experience to their clientele in which they can live to talk about, and an experience that they can easily pass on to people and basically their kids.
Which brands come to mind as we talk about this push towards NFTs?
I mean, last year was a really good year for NFTs. We saw the growth, especially in luxury brands. So you can name quite a few off the top of your head: Burberry, Dolce & Gabbana, Givenchy, Gucci, and even Nigerian brands, right? There's a particular Nigerian brand, Grey 93. The brand has basically worked with the likes of Burna Boy, Rema, and even Travis Scott. They are also getting into the NFT space. So, we're seeing, that push in the NFT space, both in Nigeria and also all over the globe.
We had that chart from Dune Analytics showing that big drop in trading volumes from $17 billion at the beginning of the year to just 466. I mean, what can we attribute to the drop?
I mean, as we can attribute basically the reasons why other assets are falling, we're seeing, there's zero appeal for riskier assets. And, right now, NFT's use case is basically predominantly out as an investment vehicle. And because of that, actions of economic policies that we've been seeing and investor activities are drastically slowed down. So we point to the usual issues, the battle against inflation, interest rate hikes, supply chain crisis, the war between Russia and Ukraine, high energy prices, and so on. These are the reasons why NFT prices are dropping today.
So doesn't this drop in volumes present a challenge for luxury companies that are looking to get into these NFTs?
For this, you can actually look at it two ways, right? If we're looking at it from like a macro perspective, yes, the drop in the current volume would definitely present a problem. But however, when we're looking at it and we're trying to understand it for the target of luxury goods, it may not necessarily have it may not necessarily affect them because their clientele to begin with are not easily swayed by the current economic climate. So it may be a little bit challenging, but for them to push and sell their NFTs to the public, there's already that exclusivity. So they're not necessarily selling to the general market. They're selling to selected few people which can afford to buy these NFTs, at the exorbitant prices that they're going for today. So I do not believe that it will present a problem for them.
All right. I think right before we came to in our last segment, there's a billionaire who wants to change the way the internet works. So let's talk about Web3. Can you define Web3 for our viewers?
Well, for me, I would say Web3 is a buzzword, sorry. And the idea is from the iteration of, it's like a new iteration for the WWW, which is the World Wide Web. So this new iteration wants to basically incorporate stuff like decentralization, blockchain technology, token-based economy, and so on, and a lot of other things. So let's try and explain this down a little bit. Now, the reason why Web3 is big today is because of the need for decentralization. And, decentralization came with the growth of cryptocurrencies, right? So now let's use an example. Before we had, Web3, there was Web2, which was majorly characterized as centralization because the data in Web2 were owned basically by big tech companies that we have today. And Web3 is basically more like a breakaway from that. And I'll give you an example. The classical game Temple Run, when you are playing the game, you can buy in-game characters and whatnot with actual money. But in the actual sense, once you delete the application, that in-game character cannot go with you, even though you've paid money, right? That in-game character belongs to the company, regardless of whether or not you've paid. So you're more or less renting. But with Web3, what they're basically saying is, if you purchase an in-game character, that in-game character becomes yours and yours for life until you sell it, right? So that's where the big difference is between Web2 and Web3.
Thanks for that. Thank you so much. So what's the potential for Web3 and blockchain technology for firms looking to improve operations or, streamline sales?
There are a lot of potentials. Like I said, there's a growing trend, especially for the need of privacy. Remember the whole Facebook debacle and selling of data and whatnot. So there's this, growing trend for privacy and decentralization. Today, almost, all our phones are tracking everything that we do. I remember one time when I was talking with my friend on the phone about buying headphones. And then when I went on social media, I just started seeing advertisements for headphones. And, that is now becoming a problem because now people want to operate in a safe environment where privacy and decentralization is king. And organizations pivoting into Web3 gives exactly what the people want today. And that's where the value proposition in Web3 is. And that's where firms can actually leverage on Web3 to sell this idea of privacy.
I had the same experience. I typed cufflinks on WhatsApp with a friend. Next thing I know, I started seeing ads for cufflinks. Let's add metaverse. Let's add the metaverse. You mentioned the Facebook debacle and all that stuff. So Web3, NFTs. You throw in the metaverse. How do they all intertwine? And what's the benefit for businesses?
Well, it's all about, like I said, for luxury goods and even for the metaverse, Web3, NFTs, everything. It's all about selling a unique experience, right? Let me give you an example. Some time ago on Decentraland, there was a wedding that happened on Decentraland where people all over the world attended the wedding. And how was it like? There was a pulpit, the bride, the groom, there was a crowd, people waiting in line, trying to congratulate them. And when they finished taking their vows, they walked through the middle and everybody was cheering them on and stuff like that. So it's all about selling that experience that, people are able to feel, like make digital experiences feel a lot more real. And I'll give another example. Amazon has been working on a metaverse experience whereby, it's almost like you're in the store, going into the store with your cart and picking up items for online shoppers. So it's more fun than, the normal way we will go on Amazon and, try and select stuff, right? And, the metaverse gives even a better description. Say you're trying to buy, clothing or something for a particular size. You can easily measure yourself. You can even, try to see if it will fit so that, returns, because let's say you buy the wrong measurements of clothing or anything like that, returns are reduced so that, you have the proper experience, or that's what the experience, the metaverse, and basically all these conundrums that we're talking about are basically selling. So like I said before, it's all about selling an alternate reality that seems very, very real and, what people can really enjoy today.
Great stuff. Virtual reality weddings. I'm going to write that down. Ajibola Akanmo, African Ambassador, Authentium Foundation. Thank you so much for joining us. We appreciate your time.